I'm back. Hallelujah. So yeah, non-farm payroll day. Getting excited. Let's see what's going to happen in the next 10-15 minutes. Could be one of those interesting days, interesting figures come out. Who knows what's going to happen? But yeah, we're just going to wait and look at the charts. So interesting thing came out on FX Street. We're looking at some last minute things are going to happen potentially with the non-farm payroll figures, and looks like they are revising some of the figures coming out, so therefore we could see some better numbers than it was actually forecast. Who knows, we'll have to wait and see. And what's more surprising is that President Biden has requested a press conference pretty much straight after. Now we could see that if figures are fantastic and they've managed to pile on a lot more jobs than originally thought, then that would be a reason for him to come out and say that the US is doing fantastic and all the efforts of the stimulus package in the past couple of months have been fantastic, and that's why the recovery is going very well. If he has to come out and apologise and say the reasons for it is not going to look very good and the market's going to react very badly, I believe. So yeah, just a few interesting points coming out in the past sort of hour or so that people will be looking at. If we look at where we're going to be on numbers, so expected today is 645. Now if those revised figures of 900,000 are to be believed, then we're going to smash through the actual figures on non-farm payroll, and yeah, who knows what could happen. It could be seen as a massive bonus and things could skyrocket and come through the roof. But what's interesting, if we look at some of the charts, just got these pretty much on a 5-minute basis so we can see what's going to happen. There has been a bit of movement recently in the past 5-10 minutes on the dollar. Effectively, the dollar has been getting a little bit weaker, so that's why we've seen euro dollar gain momentum, cable pound come up, gold has been increasing as well. And if we look at indices, obviously they are also reacted quite strongly to non-farm payroll figures. The FTSE, which we drew out earlier today, has been in just this band all day, pretty much from the end of yesterday's session all the way through, just literally sideways. And that's one of the big reasons why I personally don't trade anything in the morning on non-farm, just because the news is unpredictable, as well as the markets tend to be range bound, don't tend to be doing a lot. That's been evident also. We look at euro dollar. We know obviously there's been a bigger sell-off yesterday, but again, looking at the size of these candles, they are absolutely minuscule. Even zooming in to a much better one, just got a literally just up and down. Every candle goes up, next one goes down, up, down, up, down. And so where would I want to get into a trade here? Where could I actually look to do anything? I could potentially, or other people could potentially trade range bound and sell from the high, buy from the low. But you get into a trade now, as an example, with just over 10 minutes ago before the figures coming out. And yeah, if you've got a stop loss and your stop loss is potentially 10-15 pips above the entry for going short now, that'll just be taken out in a matter of minutes. That'll just, price will just go up and go down and go all over the place. So yeah, that's why as traders, or me personally, I just like to stay out of the markets on the morning of non-farm payroll, really, and start to let the big boys or the banks or the analysis people really go through the figures that are coming out of the jobs report. They'll be looking at unemployment rate, number of jobs created, the sectors the jobs are created in, as well as looking at the salaries as well, seeing if actual pay is going up. We know from the last month's job report where numbers were significantly lower, it was not because the jobs weren't there. The jobs were being advertised, but they just couldn't get the right people to fill them. So whether the people who were all laid off beginning of the year just haven't gone back to work, decided to go and do something else with their stimulus checks, maybe they went and bought a shed load of Dogecoin beginning of the year and it went through the roof and don't need to work anymore, or they are just taking different career paths or alternative routes. So it definitely is an interesting time in the whole jobs market where people have been laid off It's probably not so bad in the UK where people are on furlough, but I also know they're struggling as well, trying to get people to come back into work in the hospitality sector, where they're trying to open up the economy, and people are being paid 80% of their salary to sit at home. So I can see why people don't want to come back into the jobs market. Let's just go back to tiling that. So yeah, it's an interesting time just watching and waiting. And just to prove to anybody who thinks I might have traded today, if I look at my FTMO account, where I'm actually doing all of my trading work at the moment and trying to get where I need to be, we can see that if we scroll down here, daily summary today, nothing placed on the 4th. And we look in here, we've got no open trades. And in my history, nothing open from today. So proof that I am sticking to my word and not trading in the morning of non-farm payroll. Now, depending on what does happen in the afternoon, it could be that there are some trades coming in. Normally, as I said before, is the figure will come out an hour before the stock market opens, and also that's where the main money will start to come in. Yes, there'll be some banks open pre-market, they'll be shifting a few things around, but until we get the stock exchange really opening up, we're going to see not much directional change. We could just see price spike around for a bit and then start to reverse potentially in an hour or 2 hours time. Now, if there is a big sell-off in the next hour, obviously the futures market looking very bearish and very negative, just as an example, could be bullish, then if we get a consolidation of that just prior to the 2:30 open, and obviously then the move continues, that's where I potentially would start to look to trade if there was going to be something in the market there. But I would probably be waiting for a significant pullback and then place some orders in the direction that the initial move went, just because the reversal is often very strong and can pull back very, very quickly. And because of that, we don't want to be caught out. We want to make sure that we catch the move going in our direction. So just take a quick look at what's happening in gold right now. We can see from yesterday as an example, gold was potentially, if I zoom out to an hour chart, in this zone here, zoom in a little bit, gold potentially where it broke down through 1895 and then retested. There was potentially for me on a smaller time frame a kind of forming of a double bottom, especially on a 5-minute chart, and breaking through this sort of level of support and resistance, this yellow section here. There was a potential for it to break through there, come all the way back up to 1910 again, as indicated by this arrow. Now, what happened was, when you obviously go out to a higher time frame, we can see that that price was rejected quite clearly in this one big hour candle, and then price continued to fall off all the way down to 1865. Since then, very much a sideways motion, and it's just been tracking all the way through. Slight recovery over in the Asia session, and we're just waiting to have to see what's going to happen. Again, if we just go into, let's say, 15-minute time frame, the majority of today has been range bound, and I think that's pretty much key to most of the markets. We've been ranging between 1865, 1874, so almost a $10 range, which isn't too bad. But again, if that was trending nicely, there could be some good buy and sell trades in there. So I do think gold could be one of the key things to move this afternoon, just because of the hedge against any negativity or against any of the bad news that might come out. So people will be flocking back into gold. There also was discussions at the beginning of the week. Again, it's all speculation based on what has been happening. And when we look at where we're in quite a long uptrend, again, let's go into the daily chart. We can see it's a lot better. We're in a long uptrend. People were targeting when it broken up through 1900, potentially getting back up to $2,000 an ounce for gold. And also yesterday it rejected, and it came from 1910 down to 1860-ish, so $50 range on that one. So we might see a bit more buyers come back into gold. Again, it all comes down to the report today. What's time now? 5 minutes to go. It's that waiting game. I've said it so many times before, is trading is probably 90% waiting around. There's probably only 1 or 2% you actually place the trades, and the rest of the other time is just managing the trade. I think that's some of the hardest disciplines for people to actually master as becoming traders or becoming investors or whatever their lifestyle wants to be. It's just really waiting and waiting and waiting. So normally I'd try and have some music in the background and have some other videos playing and chill out with my guitar in the room, or just try and walk away and do nothing. Obviously this is probably the biggest news announcement of the month at the moment, so it's always good just to watch and wait and see. I think if I was not streaming right now, I'd probably just watch on Bloomberg and see their reaction, because they often have some really interesting reactions to the news coming out. It's just that the look on their faces when you get a bad figure is like, oh my God, what happened? We were expecting this huge surge in employment and then we got nothing. Yes. Yeah, it can be quite comical. But they obviously do come back with a lot of good analysis afterwards and really in-depth review of what's going on. So yeah, they do have their uses, Bloomberg. Yeah, as we're seeing gold literally in the past, it's a 15-minute candle we're looking at now. It has rejected from this 1874 line and just come back into 1870. We see all the moving averages lined here. That's the 15 and 20 pretty much in parallel. So we can see everything for the past day or so has been in this very, very tight range. So let's just go back out to see if anything else has moved. Yeah, FTSE, as I said before, is literally in this range. Nothing that will suggest that's going to break out anytime soon. Got the US 30, so Dow Jones, just up here just to see what's happening. Again, price has been coming off in the past hour. So again, I think people are getting a bit nervous covering some of their positions, just closing them out. Because obviously with the stock markets being based on actual stocks, they could just be closing those positions off and waiting for news, and then obviously getting back in after 1:30. It's also been interesting with a lot of the stocks in the US for the past couple of days. Everyone's talking about AMC and a lot of the other stocks just going to the moon. We've obviously been in quite a long bull run, especially on stock markets, and in these sort of times they do tend to put a lot of money into those if they are feeling a bit more secure and safe. Quick drinks. I've been talking non-stop for 15 minutes, so yeah, I want to just refresh. Yeah, Christos is saying there that trading needs a lot of patience. I think that's one of the things that, as I watch more traders on YouTube and getting more into it and actually interact with more people on a regular basis, it's quite key, is that people do get sucked in very, very quickly to the get rich quick schemes, who want to follow everyone else's signals and over leverage. I find it quite interesting. Everyone wants to have leverage of 1 to 500 or more because they want to go in with a huge position. Okay, looks like the figure may have come out, because we're seeing price moving quite dramatically on euro dollar coming down, as well as gold. Let's see if there's any news announcement. It's often one of those things is that when the news does come out, it can take a while to filter through the websites. It's just the other place often is Twitter seems to get it a lot quicker than a lot of other places. So 559,000 jobs versus the 650,000 expected. Unemployment rate 5.8%, so a little bit lower than the 5.9 expected. And what has that done? Well, so we can see massive moves now. We can see that gold skyrocketing, euro going up. So yeah, definitely a much weaker dollar. The dollar's taken a massive hit on that one. That's had a same thing, a big effect onto the Dow futures rocketing up there. We see it on the euro dollar. Compare that one bar to the previous however many that have been ranging in a 5 to 10 point range. It just comes out, bang, miraculous. Now, where's that likely to go? If we just go out to an hour chart. Potential for that, if it carries on up, to hit 121.80 before it starts to get a little bit of congestion on it. But yeah, really, really interesting. So Danny's asked, do I have a trading circle of people? So I do have some friends going back many, many years that I've still keep in contact with. Keep chatting to them on Skype. They obviously now, some of them moved back to Ireland, some guys moved into Australia. And yeah, I do chat with them quite regularly. Also, where I'm locally based, there's a meetup group which I go to regularly and just interact and chat with other people. It's just good to be able to bounce ideas off, not so much going into how trades are all set up or anything else, because everyone has their own particular style or technique. And I've said before is that mine could be completely alien and random to other people, and other people might just find it bizarre how I look to get into trades or get out of trades. But I think the main thing is that social element and just being able to just talk around what we do in trading. It's making sure that you get support from other people, because it's an isolating world. We can very, very easily sit here and just stare at the screens for 8 hours a day, and it becomes almost soul destroying. I think because of that, it's nice to be able to get out and say, okay, how are you doing? How are you finding things? Are you up or down? And then just give that positive encouragement to people, because it's just nice to know that other people are in the same boat, just going through the same emotions, going through the same stress, going through the same fears, where they're going through massive greed, massive fear. It's just nice to be able to give that bit of positive support to people. It was an interesting one. I met up with a guy a long time ago who had studied economics and worked for a lot of the financial institutions over the years, and he wanted to do trading, but his analysis was so in-depth, and he was some really, really weird, bizarre analysis stuff. I'm sure in a bank it would have been fantastic if you're looking for a very small move, but in the reality of it, his trading was non-existent because he couldn't get around his head around the over-analysis work, and it just went on and on and on. And it was fantastic to look at what he knew. It was huge. He obviously had done several degrees in economics and finance, and it was just, yeah, his knowledge was fantastic, but he just wasn't able to trade. And I think that's why sometimes taking that position of just trade what you see, not what you think, is obviously a good analysis. And for me, that's what I always look for. If I look at the charts and it's clear as a direction, then I'll trade it. If it's not clear, I won't trade it. So you can see from gold here, literally in the past, let's go into a 5-minute bar, make it a bit more dramatic. In the 5 minutes since the figures came out, prices jumped from 1868 to 1880, so a $10, $12 move on gold. I expect that to continue. I don't see that's going to stop much today. But where do I get in? I don't know right now. I'd have to wait for it to consolidate, maybe form part of a flag pattern or some form of consolidation, and then just see how it's going to form over many, many hours. Because if we look at it now on gold, we've got a small red candle. That'll probably go green very quickly. If that is then my level to get back in, if I'm looking to, as always, sometimes people want for a nice big green candle, a lot of buyers, break of the top of that if the next one is then red. But because it's non-farm payroll days, we could potentially see this next candle come all the way back down. And I've seen that many, many times when news announcements come out, is that the price will literally spike up when the first candle and next candle come all the way back down. Let's just have a quick zoom back out to the other charts. Yeah, Swissy absolutely tanked by the looks of it. Gold coming up. The US 30, so the Dow Jones, big increase. What's that? 150 points on that one bar. In the scheme of things, not massive, but that probably will set the tone for the rest of the day. Euro's pulling up higher, British pound pulling up higher. So yeah, definitely what we're seeing here is a lot more weakness in the dollar. And that will probably have a knock-on effect to the rest of things. So I typically will only look at major pairs, so with the dollar against something, commodities being oil and gold, and major indices as well, so FTSE and the NASDAQ, and also the US 30. Now, because a lot of these figures are potentially inflationary and therefore have an effect on the dollar, that's why we see a lot of these moving. If we probably chose a crossed pair, let's take a look at Aussie New Zealand dollar as an example, just to see, because obviously you cancel out the dollar move, we've got the Aussie against the New Zealand. Put in my template, it looks a bit better. So we can see here as an example, Aussie New Zealand dollar, there's virtually no movement because the dollar has cancelled itself out. We've got the Australian against the US dollar against New Zealand dollar, cancel them out, and before we know it, there's very little price movement. So we can see there in that 5-minute bar, it's moved 2 or 3 pips, nothing at all. So these are the ones that possibly could be traded, but when we then obviously look at the major ones that I'd be more interested in, that's where we get these bigger spikes and bigger moves around non-farm payroll figures. So yeah, that's pretty much me done for this non-farm session. It's been an interesting one. As I said, just looking at gold here, if we're using that close of the first 5-minute candle as then a break consolidation, we'll break through, but the next one is coming all the way back down. So I don't know what's going to happen today. It's going to be a real digestion of the numbers, the figures. And obviously then I said, let all the smart people come up with the big moves, let them tell all their big traders in the pit what they want to buy and what they want to sell, and therefore let them determine the next trend move, and I will follow what they decide. There's no way that I can actually influence the trend. My trading is non-existent. The amount of my pot is bugger all compared to the billions and trillions of dollars moved around in the Forex market. So yeah, I just want to ride their coattails, see what they're going to come up with, and therefore ride it for the next move and try and get, like I say, 1 or 2% move on my account, and therefore bank that and then move on to the next day. So yeah, that's been just over 20 minutes of me rambling on about non-farm payroll figures and news. So I'll probably wrap it up there and probably close down for the weekend. Enjoy the fantastic weekend we've got ahead of ourselves. Get out and do something a bit more interesting that's tearing at charts. Might make a few videos, but who knows. But anyway, thanks everyone for joining in today, watching these news coming out and getting my sort of thoughts on what's going on. I hope you've managed to get some trades in, but at the same time, I also hope you haven't been spiked out and lost anything that you've had running this morning. My own advice is non-farm payroll days, don't trade. Thanks a lot, guys, and I will catch up with you all again soon. Cheers.